All eyes are on Fed Chairman Ben Bernanke as the Fed is gearing up to meet on Tuesday and Wednesday, but are we actually going to learn anything new? Joining me today is Dave Williams from Strategic Gold. Dave, thank you so much for joining me. It's always a pleasure. Now, the markets have been pretty edgy since May when Bernanke said they could begin to start scaling back their stimulus. Do you think we'll actually hear anything new from them this week?
I think if we hear anything new, it's going to be in the details, and we're going to have to parse that. I think generally we're not going to hear anything new. It's going to be much of the same.
Now, they also said they will not change their policy until the outlook for the labor market starts to improve substantially. What does that even mean? Does anyone even know what they mean when they do say improve substantially?
They don't, and that's what people are hoping for, to maybe define that a little bit. But in the meantime, it's telling you that they're not going to change anything because it hasn't improved substantially, and so that's just giving us more time. So you're talking at least by the end of the year, if not after that. So really, I think things stay generally the same.
And finally, if the Fed doesn't end up changing their policy this time around, what exactly needs to happen for them to do so?
There has to be a substantial change in the underlying economy. In other words, job creation has to grow tremendously, or inflation has to increase substantially. Different things like that have to happen for them to change their stance. Otherwise, I believe they're just going to continue doing what they're doing because they believe it's working. So in the short run, I think everything stays the same.